Um, okay. So these programs are pretty simple. Um, my job as the underwriter is just to walk you through them, figure out if these programs are a good fit. If not, no worries. They are not mandatory. The pricing of the programs are going to be based off of three things, typically age, health, and then the amount and the type of coverage that we would be applying for. With that being said, the questions that I'll be asking are all just so I can find the best programs for you based off of your situation, okay?
Okay.
All right. So currently right now, is the home, how many more years? Is it like 25, 30 years left on the mortgage?
Well, 2 years. Yeah, about 20.
20 more years total? Okay. And then how much equity do you guys have built up in the home?
What's equity?
Like, I guess, how much is the home appraised for? Do you know how much it's worth?
Standing up right now is appraised. The value would be like 343,000.
And how much left do you owe?
No, I mean when I bought the house, it was appraised for 200 and what's it, 89 or 90. I think 289. But the value of the home right now is 343. I
Wow.
got left on it is like I think 278,000, I believe.
Okay. And about how much are you paying monthly for the mortgage payments?
Right now, 2008.
Okay. All right. And then what interest rate did you get?
Huh?
What was your interest rate that you got?
I believe it was 2.7.
Okay. Very good. All right. So let's see here. I guess if is your the income the only income in the home, or is there do you have
Yes.
okay. So only income. And about what would your income be per month?
Uh-huh. That's after taxes, right?
Yeah.
What, 9,000?
Okay. All right. And what insurance do you have currently that's independent and outside of work right now?
Say it again?
What insurance do you have that's independent and outside of work?
What insurance?
Yeah, do you have any insurance that's currently in place?
I got the home insurance.
Okay. No life insurance though?
Yeah, I have life insurance.
Okay. What does that plan look like?
Well, I got one for I have two. I got one for both of them are for $10,000.
$10,000 policies. Okay. And about how much do you pay for those?
Well, one is paid off, and a month for the other one I pay like $18.22 a
Okay.
month.
Are those through Globe Life or AARP?
No, that's Columbia Mutual Life Insurance.
Okay. Well, I'm glad to see that you have something in place. Do you know the difference between the mortgage protection plans and the typical life insurance programs that are out there?
No, but I think I have the mortgage protection insurance also, I think.
Okay. So I guess right now, if something happened to your income, would you be able to make mortgage payments month to month?
What you said?
If something happened to your income right now, would you be able to make the mortgage payments on a monthly basis, like make that $2,000 payment without your income?
No.
Okay. So these programs are designed to help you be able to make the mortgage payments if something bad happens. That means you can't go to work, you can't actively earn your income, okay? They're designed to keep you in the home. And we'll look at a few different directions for you to make sure we look at a program that makes sense. But we'll kind of get to that in a second here. In the past, Daphne, any kind of medical diagnoses or ailments?
Asthma.
Okay. And are you on an inhaler for that?
Yeah, as needed inhaler, not daily.
Okay. And do you take any other prescription medications?
No,
Okay. Any oxygen to assist with breathing?
no,
Okay. How about um, any license suspensions or DUIs or felonies in the past?
no,
All right. No issues with like cancer, COPD, kidney, liver disease, anything like that in the last 10 years. Okay, so pretty healthy.
yes.
Okay. And what would a ballpark on your height and weight be?
My height is 5'9" and about 200 pounds.
Okay. All right, go with that pen and paper. I want you to take down some information here for me, okay? The first thing I want you to take down is going to be my personal cell phone number.
Okay,
And then I want you to take down, so the first thing I'll have you take down, sorry, is 610
0,
235
2, 3, 5, 3,
3037.
3, 7.
Okay, and that is my direct line. That's the number that we're on here today, okay? Now, I want you to have that because you'll be able to reach out to me rather than having to go call any companies or wait on hold. You're going to be able to go back and forth with me, and we'll make sure that you'll be able to get it questions answered. You'll be working alongside me rather than one of those big companies. So you can always communicate directly with me, okay?
Okay,
That'll make it a little bit easier for everybody. Now, with that being said, I want you to take down my name as well. That's just going to be Tyler, Tyler. And then my last name is Glennon. That's Glennon.
okay,
And then I sent you that photo of my virtual business card and my license. Did you get that yesterday?
yes.
Okay, good. Those are some of the companies that we work alongside of. A couple of them are John Hancock, Aetna, Prosperity, Transamerica, Mutual of Omaha, Americo, Foresters, American Amicable. There's plenty of them. So our job is really to look at the programs that make the most sense for you. And then we can walk through what those look like, and I'll make sure that I explain them properly for you, okay? All right. So right now, with your current situation, seems like you're the only one working in the house, right?
Yes.
And without your income, then the mortgage payments wouldn't be able to be made, right? Okay, so if something did happen to you, would you want the family to keep the home or sell it and down? You want them to keep it?
Yes.
Okay. And right now, is there anything put in place to help the family be able to keep the home?
Well, we say it again?
Is there anything put in place right now to help them be able to keep the house if something happened to you?
No.
Okay. Do you know what they would do?
No.
Okay. All right. So with that pen and paper, I want you to take down a few more things for me, okay? I want you to write down the number 1. I want you to write down mortgage next to that. And then I want you to take down the total mortgage that you have left that you still owe. And I think you said it's about 278,000, right?
Yeah.
So we'll write that down there. All right. And then under that, we'll write a number 2. Then we're going to write income. Then we're going to write your 9,000 right there. And then for number 3, we're going to write equity. And then we're going to write down, it looks like from my math, you have about, we'll just say 60,000 in equity, just to ballpark it, okay? What that means is if you sold the house right now, you would profit about $60,000. Most of the people that we work with, their biggest thing that they want to get out of these programs is protecting that equity. So, Daphne, even if your family had to sell the home, that's an asset that they would want to make sure that they had the time to put the house on the market. And even if it was in 10 years, they would be able to sell the home rather than when they missed the mortgage payments, the house didn't have to go back to the bank because they would take all that equity and then they wouldn't have that asset anymore or that money that's in the home, okay? Does that make sense?
Yes.
Okay. And Daphne, are you do you use nicotine or any kind of tobacco products?
No, I don't.
Okay. So if we move up from the number 3 and we go to number 2 now, if we look at our income, right now our income is the one thing that's keeping the home in your possession. So we want to make sure your income is protected. Now, there's a lot of things in life that are uncontrollable. Some of them can be our health, right? If we were to get sick and not be able to go to work and earn active income, or even if we were to get in a car crash by, maybe a teenager texting and driving who swerves into your lane, ends up hitting and killing you, we would want to make sure that you would be protected and have access to funds in that time, okay? This would give you the ability to continue to make mortgage payments even when you're not earning active income, okay? So you would have protection for critical, chronic, and terminal illnesses, and you'd be able to access this policy to use it to make mortgage payments to keep you staying in the home. So you wouldn't have to give the home back to the bank, okay? And then the number 1, your mortgage, if something happened to you and God forbid, Daphne, but you were to pass, your kids would be able to get a lump sum payment that would give them a large chunk or all of the mortgage payments to be able to stay in the home and keep that house, okay? Because that's an asset. And that asset is very valuable. So we want to make sure that they would have the ability to stay inside the home, okay? And correct me if I'm wrong, did you say you have 20 years left on the mortgage right now?
Yeah.
Okay. All right. Let's see here. Very good. 20 years. Good for you. All right. And I know you have listed your children here would be beneficiary. Are you going to leave multiple beneficiaries or would it just be one?
The two sons.
Two sons. Okay. Two sons. Got it. Is all this making sense so far?
Yes.
Okay. These programs were designed, Daphne, to make sure that while you're still alive, you have coverage because most times these policies, our goal is to outlive it. So even if we outlive the policy, we want to make sure that we're still going to have protection throughout this whole time. So if we don't pass, we want to be protected during the time that if something happened to us while we were still alive, we would still be benefited, right?
Yes.
And I remember you said as of right now, the kids wouldn't be able to come up with the money, right?
No.
Okay. Does this sound like a solution that would make sense to help them stay in the home?
Yes.
Okay. I want to just explain the process of all of this really quickly with you. And I want you to understand that this stuff is very simple. So all we have to do is look at a couple different options. Nobody knows your budget better than you do. And Daphne, 100% of my clients agree that if this stuff doesn't make sense on a month-to-month basis, it doesn't make sense to do at all. So we'll want to make sure whatever we get set up for you is going to be comfortable and inside your budget. Okay. Now, with that being said, what we usually do is we'll look at a couple different options. My system will auto-generate a few of them. And then you'll tell me which one feels like it's the most comfortable. And we can walk through this process together. And I'll help you get everything structured and set up. Okay. Now they've made it very simple for us to go through this stuff ever since COVID. They just want to make sure that everyone gets the protection that they need and that they can get very easily. So we'll be able to do it very easily. Okay. Okay. So I want to tell you a little bit about the company and then the products just in a little bit more detail. It's going to be called Americo, and they've been around for over 100 years and they've never missed any payout claims. Okay. Now, Americo has a very unique product, which, like we talked about, it's going to have those living benefits. So for critical, chronic, and terminal illnesses, you're going to be able to access the money, a large portion of this death benefit while you're still alive, to be able to make mortgage payments rather than when you miss a couple of them, the house going back to the bank. Okay. Does that make sense?
Yes.
Okay. Americo has an A rating through AM Best, so we know that they'll be around forever. And they're a company that pays out their claims in a tax-free fashion. So this company, if something happens to you and you passed away, it would leave a tax-free check to the kids. And then if you needed to access the money while you're still alive, you're going to have that money get paid out tax-free to you. Okay. The programs will be 20 years long, so the same length as your mortgage. You'll have a death benefit if you pass away. If you need access to the policy's death benefit and a large portion of it while you're still alive from critical, chronic, or terminal illnesses, you'll have that ability to access it by contacting me, and we'll put together the doctor's note together to be able to get that for you. Okay.
All right.
So usually what we do is we'll take a look at 3 different choices for you. Now, I like to look at a full coverage amount, so we'll look at a 278,000. And then we'll look at maybe something that would be a large portion of it to give your family, over 15 years of mortgage payments to be able to make those payments. And then one that's just about half, okay?
All right.
So the first option I want you to put down here is going to be for the full mortgage amount, which is the 278,000. The second option, I want you to put 220,000. And the third option, I want you to put 170,000, okay? Now, since it isn't a matter of whether or not we'll get you set up with one of them, because we need it, right? Right, Daphne?
Yes.
Okay. I'm going to pull up your request for coverage. Like I said, we'll walk through it together. It's very simple, and it'll only take us a couple of minutes. And while I pull this up, tell me which one of these programs would make the most sense on a month-to-month basis. Okay. For the 278,000, the full mortgage protection, it's going to be $223 a month. For the 220,000 in coverage, it's going to be $178 a month. And then for 170,000 in coverage, it's going to be just $140 a month, okay?
All right.
Now, which one of these makes the most sense to start off with?
The $223 a month.
Okay. And can you just verify the date of birth for yourself?